Well, we had another hugely volatile day here as the S&P 500 ended up finishing with a $3.75 or 3.2% gain here. And once again, we saw the largest volume of the year. The problem with looking at the largest volume is you never know what the next day is going to bring. But obviously, we've reached a very emotional point in this market, and we experienced a large turnaround here today. The market first gapped higher, and then we saw those gains evaporate as the market undercut yesterday's lows, made those new lows, and then we had more government intervention in the market once again. And as the market recaptured VWAP midday, it kind of poked around that level, and then we heard news that the Europeans were basically banning short sales on financials. That actually occurred in here. It was kind of a delayed reaction a little bit, but then late in the day, with an hour to go, the buyers really showed up as the pressure mounts on short sellers. Problem is, where did this market come up to? We're still in a bear market, obviously. One day is not going to change that. But there's just been tremendous trading opportunity once again. We're right back up to that declining 5-day moving average, and we're right back up to this prior level of support that had broken earlier in the week, had acted as resistance on Tuesday after the Federal Reserve met and made no change to monetary policy. Wednesday we broke lower. Today, obviously, we've got a big recovery. We're still down pretty significantly for the week, about 3.5–4% for the S&P 500. So we're not out of the woods yet, but obviously that huge volume rally in here and the fact that the government is taking such drastic measures does seem like there ought to be a little bit further bounce in here. But again, defense wins the game. What I think you want to look at in this market is probably let's look at the 10-minute time frame. Probably a pullback. We did well. First of all, let's just take a look in here. Let me clear this mess up. Here's been the recent little downtrend, and that's what also led to this increased momentum here this afternoon. What we saw was the pattern of lower highs and lower lows had continued. We rallied up, made another lower high, followed up by a higher low, and then it took out this high and broke the trend line. That's where the market rallied from. What I'd like to see is some pullback, maybe down towards 119.5 or so, and then maybe this 5-day moving average flattens out, and then we can take out 122, and perhaps this turns into a similar panic bottom as we've seen a couple times this year. But it doesn't mean we're out of the woods for this market or that this bear market is over. Don't let one day's action fool you into thinking that. Look at all the huge green candles we see on the way down. Some of the sharpest rallies occur during a bearish decline. So I think that it just continues to be a day trader's environment, and there's just huge, fantastic opportunities if you're fast enough and if you can recognize these things developing in real time. The Russell 2000 was up $4 today. This group here, let's look at this 10-minute time frame, obliterated the 5-day moving average and this downtrend line here, as well as this prior level of support at $70 that was acting as resistance earlier in the week. This market is obviously a little bit extended. Probably would like to see it pull back down towards 70 or so, looking at a 30-minute time frame. On the 30-minute time frame, we broke the downtrend line as well. So maybe it's going to pull back to 70 and a half, $71 a share. Tomorrow's options expiration day, so we're gonna that should add to the volatility as well. But it's just a very choppy trading environment in here. If you made money on the long side today, obviously there was huge opportunity for it, and just be sure to protect those gains and don't get too carried away thinking that the bottom has been made. That remains to be seen. And again, I said it 2 days ago that there were encouraging signs with that big volume, and we've seen a lot more volatility in between, but the opportunities are clearly there intraday. The semiconductors, this group, also traded some of the largest volume. We've seen that this market has been down at lows not seen since 2003, and we're looking like maybe a flush out in here, but still a lot of work needs to be done. We've got a potential large resistance level up ahead at 27.25, and on the 30-minute time frame, this group probably looking been one of the best, just because it's up to this level of resistance. A little further pullback. You see that 5-day moving average is actually advancing in the semiconductors. So that's what makes me believe that we might get a little bit further rally in here. Ideally, again, I'd like to see a pullback maybe to that 5-day moving average, and then see this market break past this $26 level, and then go on to challenge that 27 and a quarter area. The financials obviously are where the big news has been, and this group has been. Let's take a look at the daily time frame. We saw the market didn't make a new intraday low in here, but it came down close to there, found buyers. The some of the brokerage firms were getting hammered real hard early on, and then obviously they said, basically a lot of people said, we're not going to let you short them anymore, and that brought the financials so a little bit of confidence, that is, into the financials. Same type of pattern. We broke down in here early on. It rallied up, pulled back, and then late in the day we pushed past this little intraday level of resistance at about 19 and a quarter, and just blasted higher. Now, if we can see this 19 and a quarter level hold, then perhaps we can turn this into something a little bit larger. We've got 1975 is again the more important level, and then we've got this $20.35 area. It's an interesting thing, just as a side, with the popularity of the SKF, the inverse financials. What's going to happen to their ability to sell short the shares to make it the ability to trade those issues? Anyways, the downtrend line on the 30-minute time frame has been broken, and actually we're looking at an hourly time frame, but it's been broken in here. We've got this little higher high right here at 19 and a quarter. It'd be nice to see that hold as support in that area and see that 5-day moving average flatten out. If we take out these lows, then anything's possible. But perhaps we're seeing the worst behind us in here, as the government is trying as best they can to put a plug in these holes and find a solution to the problems. Again, though, it doesn't mean that that it's time to rush out and buy these things. Bottoms take time, as well as a price healing, but intraday, obviously, there's just some tremendous opportunities in there. It's good to see that the world isn't coming to an end, and gold is back down as well. I guess I have personal feelings about gold, because when gold is rallying, it means everything else is terrible, and I don't like that particularly. But my opinion doesn't matter. The fact is, the market rallied up to a declining 50-day moving average. Now, I think it's probably going to spend some time looking for support in here. Hopefully, it didn't chase gold higher, as it looked like the end of the world was coming. But in here, a little bit further pullback, maybe to meet this rising 5-day moving averages, where the next leg perhaps continues higher for gold. But again, it's the chart's really kind of a mess in here as well. So looking at the NASDAQ 100 finally, the NASDAQ was up 3.3%, $1.36 gain. We didn't see quite the massive volume in here as we did in the other markets. And looking at a 30-minute time frame, same thing, that we rallied right up to that declining 5-day moving average, and we've also got this prior level of support in here. Let me just actually go to the 10-minute time frame. But this prior level of support in here at 42 and a quarter to 42.50 is really where the key resistance that this market will have to breach in order for some real follow through to the upside. It came right up to that 5-day moving average, found some selling in there late in the day. Ideally, again, I'd like to see this maybe pull back to 40.75, 41, and then a new assault on that 42.25, 42.50 level. We've also got that trend line intact here on the 10-minute time frame. I was looking at a monthly time frame here as well during the day, and this trend line kind of spoke to me, I guess you could say, a little bit, but that's right down at about $39.40, well, about $38 a share. And if you recall, again, that this triangle pattern was suggesting approximately a move down towards 37. That was also the Fibonacci retracement off of these lows from the last time the trend line was hit right there. Well, no, I guess let me back up. That was off the 2002 lows, was a 50% retracement down near 37. So it doesn't mean we've seen the worst, but we've really gotten deeply oversold here, and a little bit further bounce just seems like it ought to happen. But don't base your trading decisions on what it seems like should happen. Base it on what you see actually happening on the charts. And when this market blasted past that daily VWAP in here after being held captive by it all day, made these higher lows in here, that's really when it took off. And there were some great trading opportunities, and there'll continue to be some great trading opportunities. Don't feel like you missed out on the bottom, because again, there'll be a lot of opportunities, particularly in the individual issues, as this volatility isn't going to go anywhere quickly.